Have you ever stopped to think about what would happen if, overnight, your bank simply froze access to your money? It may sound like an exaggeration, but that's exactly what happened in 2023 with the famous Silicon Valley Bank, one of the largest banks in the United States focused on technology companies. In a matter of hours, everything collapsed. Investors, entrepreneurs, and even employees were left without access to the money they thought was safe. Panic spread like wildfire. People were trying to withdraw, transfer, protect what was left. But the damage was already done. And the scariest part? This bank was not small nor poorly managed. It was respected, solid, full of millionaire clients. And even so, it collapsed. That showed the world something many prefer to ignore. The banking system is not as fail-proof as they made us believe. What few people understand is that behind the doors of a modern bank, there is a complex mechanism made of loans, financial bets, and political decisions. When everything goes well, no one worries. But when the wind changes, those gears can jam. And when they jam, you may lose access to the money you took a lifetime to save. The truth is that we're facing a silent crisis of trust. You can no longer trust any institution 100%, no matter how big it is. And this is not paranoia, it's prudence. It's financial intelligence. Those who understood this early started to diversify, because today, more than ever, having everything in one place is a risk. And the riskiest place might be precisely the one you trust the most. For a long time, we were taught that keeping money in the bank was a sign of security. Our parents and grandparents said, "Put it in savings, it's protected there." But the world has changed, and what once seemed like a fortress has now become a disguised trap. You know that money you leave sitting in a checking account or even in savings, thinking it's earning something. Well, it's losing value day by day. Inflation works like an invisible thief, slowly stealing your money's purchasing power while you sleep. Let's take a simple example. If you have $10,000 sitting in the bank and the annual inflation is 6%, at the end of the year, that money will only buy the equivalent of $9,400. You didn't lose the bills, but you lost value. And the worst part, the bank takes your money and lends it to others, charging high interest while it pays you pennies. It's like the bank earns a lot using your money and gives you cents in return. Besides that, this money is exposed to risks you don't see: political changes, economic crises, bank collapses, withdrawal freezes. Have you imagined not being able to use your own money when you need it most? Today, leaving everything in the bank is like parking your car on the street with the engine running and the door open. It may seem convenient, but it's extremely dangerous. The world has changed, and anyone who wants to protect their wealth needs to change too. That's why those who understand the money game look for alternatives, because idle money is not security. It's silent loss. Imagine you're playing a board game, but suddenly the rules change without warning. That's exactly what's happening with the global economy. For decades, people followed the same script: work, save money in the bank, invest a little here and there, and wait for a peaceful retirement. But today, that script is outdated. The global economic landscape has changed and changed fast. Inflation is rising again in several countries, eating away at wages and savings. Interest rates are higher, which makes credit more expensive, hinders growth, and puts pressure on families and businesses. Central banks around the world are on alert, trying to balance the plates without letting anything fall. At the same time, we're seeing growing tension between world powers, weakened supply chains, wars, and energy crises. All of this affects the value of money, investments, and the stability of banks. If before it was enough to invest in something conservative and sleep peacefully, now that peace no longer exists. Money needs to be smarter. It needs to work strategically, not just sit still. And that requires that you, as an investor, as a citizen, also change your mindset. You can't live like it's 1995 anymore. We're in 2025, and those who don't adapt lose. Those who insist on playing by the old rules are doomed to fall behind. That's why, from now on, anyone who wants to protect and grow their wealth needs to think like a strategist, not like a mere saver. And now that you understand the new game, are you ready to discover the assets that really make sense in this scenario? In a world where everything seems uncertain, banks closing, currencies losing value, markets shaking, there's a place where the most cautious investor seeks shelter: Treasury bonds. They work like this. You lend money to the government, and in return, it promises to pay you back with interest. Simple. But why is this so powerful? Because unlike many promises in the financial world, this one has solid backing: the government itself. In other words, the chance of default is minimal. After all, it can even print money to pay you if necessary. And there's more. Today, these bonds can pay more than 4% per year, which is excellent for a low-risk investment. That's more than many accounts pay out there, and without making you lose sleep. But the great secret of Treasury bonds is the role they play in times of crisis. When everything around you seems uncertain, they act as a safe haven, protecting part of your wealth. While other assets fluctuate or lose value, they stay strong, keeping their promise. And the best part? You can start with little. Many countries allow you to invest with less than $30. In other words, it's an accessible way to start building your security base. In an unstable global scenario, Treasury bonds are like that umbrella you carry even when the sky is blue, because those who've seen the storm don't risk going out without protection anymore. Behind every great fortune, there is almost always a solid base of real estate investments. And that's no coincidence. Real estate is that asset you can touch, see, rent, and that, over time, tends to appreciate. When you buy a well-located property, you're acquiring much more than four walls. You're buying a source of income that can pay you month after month for years. The tenant lives, works, or profits in your space, and you get paid for it. It's the famous money working for you, literally while you sleep. Besides that, real estate has a special power. It protects against inflation. That's because rents can be adjusted periodically, and the property value tends to rise over the years, following the economy. But not everyone has hundreds of thousands of dollars to buy a house or apartment. That's where real estate investment funds come in, also known as REITs. They work like a condo of investors who together buy large properties: malls, hospitals, logistics warehouses, commercial buildings, and share the profits generated through rent or sales. With less than $10 or $20, you can already own a fraction of these enterprises and receive your share of the monthly income directly into your account without having to deal with tenants or renovations. And you know the best part? These funds are traded on the stock exchange, which gives them liquidity. You can buy and sell whenever you want, unlike a physical property that can take months to be sold. In short, real estate and REITs are real, tangible, and productive assets that offer passive income and stability. They are solid pillars for those who are building financial freedom in a smart way. When the world enters into crisis, when currencies lose value, when markets tremble, there's one asset that always reemerges as a refuge: gold. It's not just a shiny metal, it's a symbol of universal value. From ancient civilizations to today, gold is seen as protection, wealth, and stability. And do you know why? Because it doesn't depend on governments, banks, or financial systems. It's physical, scarce, and accepted worldwide. Unlike paper money, which can be printed in mass, gold needs to be mined, refined, and stored. And that makes it valuable. In a scenario where inflation rises, where money loses purchasing power, gold maintains its real value. During wars, bank crises, or economic collapses, gold behaves like silent insurance. It doesn't generate income, doesn't pay dividends, but it protects. It's like an invisible vault for your wealth. And today, you don't need to have heavy bars stored at home. There are practical ways to invest in gold through brokers, buying certified physical gold, through ETFs, funds that follow the gold price, traded on the stock market, or even via banks and digital platforms that offer fractions of the metal. The important thing is to understand that gold is not an investment to get rich quick. It's an anchor to balance your portfolio. When everything around shakes, it holds its value firm. Having a part of your wealth in gold is like building a house with stone foundations. You may even change the interior decor, but you know that no matter what happens outside, it won't collapse. It may seem curious, but in times of economic uncertainty, luxury watches, classic cars, works of art, and even rare toys become true gold mines. This happens for a simple reason: scarcity and desire. Unlike financial assets that can be replicated infinitely, a rare Rolex or a painting by a renowned artist cannot be copied or replaced. And when something is limited, its value tends to rise, especially when there are collectors and investors willing to pay more and more for it. In recent years, Swiss watches like Patek Philippe and Rolex have appreciated more than many stocks. Well-preserved vintage cars have doubled or even tripled in value in a few years. And toys from the 80s and 90s, like sealed action figures or limited edition video games, have become true relics. But beware, this type of asset requires knowledge and patience. It's not just about buying out of taste, but choosing with criteria, rare models with good provenance, and that have demand in the market. Besides that, these items usually have another positive point. They are uncorrelated with the traditional financial system. That is, when stock markets fall, when currencies lose value, these assets can continue rising, precisely because they are sought after in times of instability. Investing in luxury or collectible items is like having part of your wealth stored in something beautiful, unique, and desirable. It's a type of investment that combines emotional value, exclusivity, and financial strategy. In an increasingly digital world, where everything seems to happen through apps, cards, and passwords, many people have forgotten the real value of something basic: having cash in hand. But the truth is that when things really get tight, when banks close, systems go down, or cards get blocked, those who have cash are one step ahead. Look at what happened in countries that faced banking collapses or political crises in recent years. People rushed to ATMs and the machines were empty, or the banks limited withdrawals, and those who didn't have a reserve at home were stuck without access to their own money. That's why keeping a small emergency reserve in physical money is an act of intelligence, not distrust. It doesn't have to be a fortune, just enough to cover essential expenses for a few days or weeks: food, transportation, health, communication. Physical money is the only asset with total liquidity and absolute control. You don't need the internet, a password, or third-party approval to use it. It's there, available when you need it most. Of course, it's not meant to be hidden just anywhere, nor for large amounts, but having a strategic amount, well stored and protected, can be the difference between chaos and calm in critical moments. It's like having a flashlight during a blackout. You may never use it, but when the darkness comes, it makes all the difference. Imagine for a moment that instead of depending on a fixed salary, you had a source of income created by yourself. Something that grows over time, that gives you freedom, and that cannot be fired, frozen by a bank, or devalued by inflation. That's the power of having your own business. Today, more than ever, entrepreneurship has ceased to be a luxury for the few and has become a necessity for those who want real financial freedom. And when we talk about business, it doesn't have to be a big company or a physical store downtown. It can be something that starts in your living room with a cell phone, a computer, and a good idea. It can be an online store, a consultancy, a YouTube channel, an Instagram profile selling products or services. It can be a digital, scalable business that grows while you sleep, or something more traditional that solves a real problem in your neighborhood, in your city, in your country. The big insight is that when you have your own business, you control the game. You decide how much you want to grow. You set your prices, you invest your time, and reap the results. And more, a business is not just a source of income, it's an asset that can be sold, licensed, expanded, or inherited. It's something that creates value over time, like a tree you plant and that starts to bear fruit, and later shade. Yes, it's hard work. It requires dedication, study, resilience. But the difference is that this effort builds something that is yours. It's not like working 30 years to make the owner of a company rich. It's using those 30 years to build something that stays with you, with your family, with your children. And there's more. Entrepreneurship teaches you how to deal with real money. You learn about profit, cost, cash flow, marketing, sales. You learn to think like a rich person, even if you start small. And believe me, the greatest fortunes in the world were built this way. People who started from scratch, but had the courage to create, take risks, and persist. So, if you want an asset that gives you income, growth, learning, control, and legacy, maybe it's time to stop looking for jobs and start creating solutions. For decades, money always had an owner, the government. Every currency we use, be it the dollar, euro, or real, is under the control of a central bank. They decide how much to print, how much interest to charge, and even when to limit people's access to their own money. But in 2009, something different emerged. A new type of money, without a bank, without government, without borders. Bitcoin appeared, and with it, crypto assets. In the beginning, it was something strange, alternative, almost invisible. Many people said, "This is temporary." But time passed, and what was just an idea became a global movement. Today, Bitcoin is considered by many as digital gold, a scarce, decentralized asset protected by advanced technology called blockchain, a type of digital ledger that cannot be erased or tampered with. Bitcoin has a fixed limit. There will only be 21 million units in the world. That makes it scarce by nature, something traditional money will never be. And that's precisely why, over the years, it has appreciated absurdly, from cents to tens of thousands of dollars. But beware, investing in crypto assets is not a lottery, nor a race to get rich quick. It's a long-term strategy for those who understand that the traditional financial system is outdated and that the future can be more digital, more decentralized, and freer. Today, in addition to Bitcoin, there are other crypto assets with different functions. Ethereum, focused on smart contracts, stablecoins, which mimic stable currencies like the dollar, and even tokens that represent real estate, companies, art, and much more. The important thing is to study, understand, and invest responsibly, not emotionally. Crypto assets represent a new type of asset that does not depend on banks, governments, or traditional brokerages. It's like having a bank account in your own pocket, totally under your control. And more, in countries with high inflation, political instability, or financial censorship, Bitcoin has been the only way to protect wealth. It's a silent revolution. And those who understand this early may be ahead of a transformation that is just beginning. Warren Buffett is one of the richest men in the world. But he didn't become a billionaire by luck. He got rich because he learned to invest the right way with patience, calm, and long-term focus. While many people try to make quick money, Buffett does the opposite. He buys shares of good companies and waits years to see the results. He himself says, "Those who are in a hurry lose money. Those who are patient get rich." Buffett only invests in companies he understands, that have good products and have already proven they know how to make a profit. Example, He bought shares of Coca-Cola and Apple companies everyone knows and uses. Another thing he always teaches, never put all your money in one thing, and never invest in what you don't understand. Oh, and he loves the power of compound interest. He started investing when he was young and let the money grow over time. The result? He became a billionaire without taking crazy risks. To sum it up, buy good things at a good price. Let time do the work. Don't follow the crowd. And never invest emotionally. If you follow Warren Buffett's simple logic, you can build real wealth without needing luck, just strategy. If you want to change your life, it's not enough to change what's in your bank account. First, you need to change who is around you. Yes, relationships are one of the most powerful assets that exist, but few people see that. The truth is that no one grows alone. People grow with other people. They grow with the right conversations, new ideas, sincere advice, and even scoldings at the right time. You know what many billionaires, successful entrepreneurs, and smart investors have in common? They know how to surround themselves with the right people, people who lift them up, who encourage, challenge, share experiences, and open doors. Warren Buffett once said, "If you walk with people who are better than you will naturally become better too." And he's right. Because relationships work like mirrors. You start acting like those you live with. If you hang out with people who only complain about life, spend more than they earn, and think they'll never get anywhere, little by little, you start thinking like that too. But if you get closer to people who talk about the future, about business, about solutions and investments, something changes in your mind. You start thinking like a rich person. You begin to see opportunities where you once saw problems. You start believing more in yourself. And we're not just talking about meeting famous people or big entrepreneurs. Sometimes a study group, an accessible mentor, a friend who has already started investing, or a channel like this one you're watching right now can be the turning point. The right relationships don't appear out of nowhere. They are built. They begin with respect, generosity, and presence. You listen, learn, help, and offer value too. Because no one likes being around someone who only wants to take, but everyone draws closer to those who add. In today's world, knowing how to build real connections is almost as important as knowing how to invest. Because a well-shared idea can generate a business. The right advice can prevent an expensive mistake, and a partnership can change your entire path. So, if you really want to grow, start by looking around you. Who is lifting you up? Who is holding you down? This simple analysis can be the first step to changing everything. What good is having money in your pocket if you have no energy in your body or peace in your mind? The truth is that your health is the greatest asset you have. Without it, everything else collapses, investments, businesses, dreams, and often we only realize this when we're already at the limit, tired, anxious, with no motivation for anything, even with a full bank account. Physical health gives you the energy to work, to be an entrepreneur, to learn, and to live. Mental health gives you clarity to make good decisions, to control impulses, and to stay focused when everything seems difficult. How many people do you know who reached financial success but lost their health along the way? They worked so much, stressed so much, that when they finally could enjoy it, they had no energy or time left. That's why taking care of your health is not an expense. It's an investment. Sleeping well is just as important as studying. Eating properly gives you more productivity than an expensive course. Exercising, meditating, walking outdoors. All of this increases your ability to earn and keep wealth. And more, your mind is what drives your choices. If it's tired, stressed, or overloaded, you run the risk of sabotaging everything, spending impulsively, giving up halfway, or making bad decisions with your money. Financial freedom starts in the mind. And it is only maintained with balance. Remember, there is no true success if your health is in ruins. Money is important, but without health, it loses its meaning. Take care of your body as you take care of your assets, and feed your mind as you feed your dreams. And if you've made it this far, it's because something inside you has already started to awaken. Maybe it's the desire to change. Maybe it's the courage to take the first step. What matters is that you're no longer in the same place you were before. From now on, each of your choices has the power to build a new path, a path with more freedom, more awareness, and more possibilities. But remember, no one has to do this alone. If this content made sense to you, share it with someone who also needs to hear it, someone who may be lost, discouraged, or just waiting for a little push. And if you want to keep learning, growing, and preparing for a stronger future, subscribe to the channel now. Here, the knowledge never stops, and neither does your growth. See you in the next video. Until then,